Good afternoon, everyone, and welcome to Tenet Fintech's second quarter earnings call for 2022, hosted by CHF Capital Markets. I am Branka Petrovic, the new manager of investor relations at Tenet Fintech Group here at Tenet's new office in Toronto. Today, we will hear from Tenet CEO Johnson Joseph and CFO Jean Landreville. Thanks to all the great questions from shareholders, the presentation will be followed by a Q&A that will be moderated by Mark Schwallenberg from MC Group. Some statements or comments made on this call may be forward-looking statements, which may include, but are not limited to, financial projections or other statements of the company's plans, objectives, expectations, or intentions. Everyone will be muted today except for the presenters. Now we can hear from Johnson. Welcome, Johnson.
Thank you, Branka. Welcome, everybody, and thank you for attending this presentation of our second quarter 2022 financial results. As we usually do, I'm going to start with a brief overview of what took place from an operational standpoint during the quarter, and then our CFO, Jean Landreville, will walk you through some of the important financial figures for the quarter. Now, I'll start with China, now that we have technically operations in both China and Canada, even though we're not generating revenue in Canada yet, but that's come. I'll tell you a little bit more about that in a few minutes. Now, China, the second quarter was a little bit difficult because of the impact of the COVID-19 restrictions, but we did manage to make some progress, as we always do. So the business continues to grow in China, even though we only had a quarter to operate fully. The supply chain financing business, which incorporates consumer goods financings, food services, and so on and so forth, continues to go really, really well, and is now becoming the base of our operations in China. So even though we only had about a month of operations, the 618 Shopping Festival was very successful for us once again, contributed to about 1/3 of our revenue during the quarter. So it shows that there's still a tremendous amount of demand for our core products and services in China. And we will continue to invest in those initiatives to continue to grow the business in China. Now, growing in China means not just growing geographically, but it also means growing in terms of different verticals that we wanted to service. And as you're probably aware, if you've been following the company, we had postponed certain investments in the insurance space last year, and we've picked up those investments considerably in the second quarter of 2022. Now, that resulted in an important increase in terms of the revenue that was generated from the insurance sector for us. We're also looking at clean energy. We expect clean energy to be very, very important for us going forward in China. So we also made some investments during the quarter in our i3060 platform. Again, although that has not started to generate revenue for us yet, we anticipate that that platform is going to be key in helping us really make our mark in the clean energy space. There are a lot of opportunities out there. We're working with some very big names in the sector, state-owned companies. They like our platform. They like the approach that we take in terms of creating this hub where different participants can take place and where we automate transactions. So the i3060 platform fits into that whole vision that we have. It really allows for clean energy projects to be done, assessed, and conducted very, very efficiently. So again, we've caught the attention of some big players. We're going to continue to invest in that sector, and we expect big things in the clean energy space going forward. Not just in China, but a lot of the participants or entities that we're dealing with in China also operate outside of China, for instance, in Europe, and some of them even have a presence in North America. So the clean energy space is kind of like seen as a special project within the Tenet Group, but it's something that we believe will be very, very big for us in the near and long term. So we're going to continue to invest in that sector. Now, when it comes to the Canadian operations, that was the most important focus for us in the second quarter. We fired a lot of people, as I've mentioned repeatedly. About this time last year, we were about, I think, 3 or 4 employees, depending on the exact date, operating out of our Montreal office here. As we speak today, we just last week we inaugurated our new Toronto office. So we have, I don't know what the exact numbers are today, but as we continue to hire more and more people, but we are around 60, maybe a little bit even more than 60 people in 2 offices right now. Between our Toronto and Montreal offices. So the growth of the business comes first by growing the manpower, the personnel. So we went from, again, 3 to 4 employees this time last year in Canada to over 60, I would say, right now. So that contributed to a lot of expenses. We also were very active during the quarter in terms of business development initiatives in Canada. We're trying to reach out to the small and medium-sized business community here in Canada, talking to potential partners. That's also going very well, but obviously that comes with expenses. So all of this contributed to the net loss that we showed for the quarter. But these are investments, right? These are things that we need to do if we're going to be growing the business outside of China, which we're very excited about. So we anticipate that the platform will be launched before the end. Well, the platform will be launched for sure before the end of this year, and we anticipate that we will begin to generate revenue outside of China and Canada before the end of 2022. So that's about it. Very, very exciting things to look forward to between now and the end of the year. Obviously, we mentioned the event that we'll be going to be holding in November to inaugurate our new Montreal office. That will coincide with the launch of the application here in Canada. And the way the application is being developed, once it's launched in Canada, we anticipate that within just a matter of a few months, we should be able to expand to the U.S. and potentially in Europe shortly thereafter. So we're looking forward to reaching these important milestones. For now, the business is continuing to grow in China. Again, if there are any concerns, I want to make sure I mention this. If there are any concerns about the fact that we only had 1 month of operations in China and how that was going to impact our guidance for the remainder of 2022, I'd like to say that what occurred during the second quarter was expected. So there should not be an impact on our guidance for the balance of 2022. Now, with that being said, I'm just going to hand it over to Jean, who's going to go over some of the specifics of the financial results for the second quarter. Jean?
Thank you, Johnson, and welcome everybody. So, like it was mentioned in the MD&A and by Johnson, second quarter was quite difficult in terms of revenue regarding the Chinese almost locked down for 2 months. So we have 1 month operation over 3. So usually we have a revenue growth in the say 2 figures, but not this quarter. So we finished with 32.4 million revenue compared to 30.6 million last quarter of last year. The second quarter of last year, sorry, for 1.7 million more. Good news is the business and the insurance business, UK and ASSI have 700,000 more revenue than last year because of the acquisition that we made in the last quarter of 2021. Supply chain 1.7 million, which we expect was get higher than that, but with the shutdown for 2 months, the supply chain services revenue was lower than expected. So there's 1.7 million more, but we're expecting more than that in the second quarter. So that explains the small variance for last year, where we aimed that it's going to be a lot better for Q3 and Q4. Cost of service is following because also the slowdown in the activity in China and first and 2 months of the quarter was so that's impact also the increase, or there was a slight margin increase over last year of 1.7%. Normally, we're aiming more between 3 and 8% increase quarter to quarter in the cost of service, but didn't happen in the second quarter for the reason that I explained for the first 2 months of the quarter. On the salary side, an increase in salary expense, mainly because of the number of employee from quarter 2021 to the last quarter of 2022. So to be precise, there's 93 more employee from 1 year to the other. So Q2 2021 we were 42 employee total, China and Canada, and now we're at 135. Mainly in Canada, the increase, like Johnson mentioned, we're at the end 50 at the end of June, but now we're on the 60 side with 10 people more in the last month and a half. So that's explained the majority of the salary increase, including the 170,000 of share-based remuneration, which is a non-cash item. I'm gonna come back to this non-cash item at the end. Consulting fees increased by 250 over last quarter of 2021, mainly for consulting that we received for expansion of our shareholder base outside in Canada to the major TSX market and other market we're looking outside of Canada. We had a question I'm going to explain more in detail, the $1 million in the outside service. So for the first time, we highlight this line items in the financial because it was important in the quarter. So there's three main components. The first one is in Canada, the development of the Cubular platform. We need to achieve our goal to launch the software before the end of the year, to hire some outside firm to make sure that we're going to be able to do it. So there's a cost of it. It's not internal salary, but it's important for the business to do it. So we get some outside service in the quarter, and it's going to be also in the Q3 and Q4 of this year. Now, we're going to make an analysis, and this is in general comments, on all these expense related to the platform, if we can capitalize or not. So we're going to make a deep, detailed analysis of these expense in Q3 and Q4 to make sure that under the policy of the company that we can capitalize, yes or no, if it's support or R&D that is not generating any further revenue, we cannot capitalize. But I suspect that there will be some money on there that some expense that was presented as expense conservatively in Q2 that will be capitalized in Q3 or Q4. Same thing in China. There was a fair amount of money invest in the clean energy platform E3060. Right now, we don't have any view on the revenue for now. It's coming in the next quarter to have the view. So it's not, we need to make sure that we can capitalize if we have revenue that's coming from these platforms. So right now, it's an expense. I know it's a $1 million that show up in the financial of the quarter, but this is a conservative approach, and we're going to see if we can capitalize. I suspect that all the clean energy expense, which is $300,000 to $400,000 since the beginning of the year that we invest in the platform, that was not capitalized, could be capitalized in the third and the fourth quarter. I hope that explained why we have this outside services in the quarter. For the rest, I would say professional fee, public relation, office supplies, and software. The difference is mainly because of the growth of the business. We have more employees, so we have some expense that is coming with it. Insurance, as you know, we have the NASDAQ that we're not in anymore, but was there last year. So we have to take a D&O insurance to cover our directors and officer last year, and the price was a sharp price for this kind of insurance regarding the environment in the state and in Canada. Finance costs. What I would like to point out here is that the 300,000 increase is mainly non-cash item. It's in the accretion of the contingent liability that we have with the Arbit acquisition of 2021. So it's really the difference from the actualization of the payment that we will do in share for the acquisition of Arbit. So the actualization that when we get closer to the end of the deal, that there's accretion of the actualization rate that we're doing. So the finance cost, 300,000, is not cash item. So it's an expense that is an accounting expense, but it's not a cash out for the company. Same thing for the amortization of a tangible asset, which is from the acquisition last year of Cubeler and Arbit. So this obviously this is not a cash item. This is a non-cash item. So it's an expense. Amortization is an expense, but not a non-cash item. With all these, the total expense for the quarter to the 7.5 million compared to 29.6 million, increase of 7.8 million over last year, mainly salary and outsourced services on the cash side. On a non-cash item, there's $2 million of non-cash item, which is the amortization really of the platform that we acquired, share-based payment, and the finance cost of 200,000. So there's increase in salary for sure for cash that we expense, but there's non-cash item in there for 2 million. I just want to point out that the 7.8 million difference is not cash that is out of the company. So that was my 2 cents of the explanation, variation of the quarter. I will have Mark. I think we have some Q&A that Mark will enter from now. Thanks for your attention. Thank you.
Thanks, John.
Thanks, Mark.
Looks like we need Johnson back up here too. Okay, we got it. Okay. Sort of top of mind, I think, on a lot of investors' conscious is just the capital market strategy. So to start off high level, Johnson, I'm going to hit you with this. Can you discuss as much as you can about the prospectus filing, tied in with the TSX uplist? We mentioned some of that in the MD&A, but anything you can share? We put out a few certain timelines or deadlines for the prospectus. So anything you can update on that front?
Sure. We're really at the stage where we're kind of like dotting the I's and crossing the T's, or is it crossing T's, dotting the I's, whatever it is, for the prospectus right now. We had delays due to the changes that we made, the recent changes that we made to our board of directors. But now that that's done, we're really in the final stages of both the uplisting application and the prospectus filing. So I would say that these things will happen within, within the next week and a half or days here. There's a chance that we could file the prospectus before the end of this week, but it really depends on the lawyers on how quickly we get to dotting the I's and crossing the T's.
Perfect, thanks. And quick follow up on that. You mentioned the new board members. Could you just elaborate? We put out a press release about it, but could you elaborate a little bit on just what the new members bring and how they'll help essentially facilitate growth in China and also launch in the North American markets and integrate the hub model, over time?
Yeah, absolutely. As we said in that news release, again, Mark and Charles did a fantastic job as board members. So I really want to thank them once again for their services. We got to the point where the company was going to need, I guess, a little bit more in terms of international experience and capital markets experience. This is expected to be a global hub. Yes, we started in China, but we have visions to be in the U.S., Europe, South America, pretty much all over the world, and we needed to find board members that had those skill sets, those connections, both from a business standpoint and from a capital market standpoint, to be able to assist the company to better do that. And we feel that we have found two extraordinary candidates, and Carol Penhel and Dylan Tinker, to help us do that.
Okay, great. A little pivot to a question about the Heartbeat Insurance revenue. So maybe for Jean. So we talked about expected revenue in Q4 last year that was deferred, and I had a shareholder curious about whether that was captured as part of the $32 million in revenue for Q2, or any clarity on how that's progressing.
Well, Jean, if you want, I can answer that. We just started really, catching up with the deferred investments. So yes, some of the revenue that was generated in Q2 came from the efforts that we put forth into the Heartbeat platform, but certainly more is expected from that platform. So by no means have we reached the peak of what we expect Heartbeat to contribute to our top and bottom line. So it's just a start. But yes, we did start to see some returns, but we expect a lot more from the platform going forward.
Okay, that's good. Regarding the Canadian operation build out, so could you just talk a little bit about the pre-registry campaign, what kind of traction you've seen from that? If possible, like any KPIs that you're tracking, like number of registrants or registered users, or anything that we're looking at particularly that you can comment on. Well,
our director of marketing at Kubler forbid me from discussing the number of pre-registrations that we have in the campaign right now. So I'm not going to say anything about that. I don't want to steal his thunder, but we're very pleased with the reception that we've had from small businesses with the pre-registration campaign. The pre-registration campaign itself can be described as as a soft campaign right now, because the Kubler website is being redone right now. There's going to be a whole new brand. Sorry, Luc, I have to say this. So there's going to be a brand new Kubler website, the logo and everything else. That's when the pre-registration campaign is really going to kick in. So right now, what the marketing team are doing is really kind of like testing certain things on social media. So we haven't totally opened the floodgates yet for the pre-registration, but what we're seeing so far is very, very encouraging. And we will disclose numbers if Luc allows me to do so. We will disclose numbers as we get closer to the November launch of the platform. But no, it's very encouraging. Now, what we're measuring in terms of KPIs, it's definitely for now the number of registrants on the platform. Everything that we're looking to do, whether it's monetizing the data or generating advertising revenue, everything is predicated on the adoption of the concept of the business hub by small and medium-sized business owners and executives. So long as they buy into the idea and they accept the trade-off of giving us access to their data in exchange for all of the services that we provide them, then that's the most important thing for us. Now, in terms of how we monetize the data, those things will be communicated in due time. But right now, the most important metric for us is the number of small businesses that are going to be registered on the platform. Everything else will fall into place after that.
Got it. Okay. No, that's awesome. Also, in regards to the Canadian operation and the associated expenses that are going along with it, what's sort of the outlook for those in terms of how they're going to continue through the end of the year and heavy into next year, or what can you comment on or clarify about that?
Sure. You know what? We don't expect the Canadian operations to be profitable for certainly not this year or maybe even 2023. We're going to have to spend money to grow the business. It's not just Canada, but the U.S. as well. We're planning on opening offices in the U.S. Before the end of 2023. So business development initiatives, marketing, and so on and so forth. So there's going to be some considerable expenses going forth for the call it the North American operations, but obviously, we expect those expenses or investments to pay dividends in the midterm and longer term for the company. Obviously, this is a different model than what we are operating right now in China, but it is a model that we believe will be far more profitable than the model in China, and elements of this model will also be introduced to what we're doing in China, which will make what we're doing in China more profitable as well. So to answer that question, yes, there's going to be significant expenses, but just like any grown company, it's normal. You have to invest before for the business to grow before you become profitable.
Okay, thanks. How are you feeling about the competitive landscape in the North American markets? It's been brought to our attention. There's some other companies that are building out small and micro business hubs. Obviously not the footprint in China that Tenet does, but how are you looking at that and thinking about that and just monitoring the industry as a whole?
We've seen different companies try to do different things. Loan brokers, companies that specialize in small business loans and so on and so forth. But when talking to prospective partners, really the offering that we have for a small or medium-sized business owner or executive is unparalleled. There are businesses out there that have certain elements of what we're doing, but the way we offer our services, the way everything is packaged, really is not seen right now in the industry. So yes, we're keeping an eye on the competition, but honestly, it all comes down to value proposition, right? Like, what are you offering the client as opposed to what a competitor is offering the client? If you look at our offering, it's hard to beat free, right? We're not charging the small businesses anything at all. So I compare that to the many benefits that they would have from being part of our network. So regardless of what anybody's doing out there, we feel very, very comfortable and confident in our ability basically to attract small businesses to our network. And like I said before, that is the most important thing. Once we're successful doing that, then everything else will fall into place.
Perfect. Perfect. Thanks. Little pivot here. So I'm sure you probably saw the news about the PCAOB agreement with Chinese authorities. And just be curious your thoughts on implications for Tenet in terms of the business in China, capital market access, SEC review, and all that. Anything you can comment on there?
Yeah, Mark, we actually have a party planned just for that specific event. That's how happy we are about what took place. No. In all seriousness, no. It's very good news for every company with ties into China. So we've had an open dialogue with the folks at the Securities and Exchange Commission. We're going to continue to do that, and this is certainly something that we will bring to their attention, and it can only work in our favor. So we're very happy about that news. Again, there's no timetable for an eventual return to the NASDAQ, but everything is pointing in the right direction, let's just say, and we're happy with the news that came out recently.
Certainly, understood on that. And I guess lastly, just we saw the news about the launch event coming up in November, and it mentions who some of the participants or who's going to be invited. Is that an open invite to all shareholders, or how does that work?
Open invite. Yeah, the offices are expected to be bigger, but I don't know. I don't know that we'd be able to accommodate every shareholder. By last count, I can't remember. Well, we have thousands of shareholders, obviously, so it's not. Unfortunately, I would love to have everybody there and just have this big party, but it's not feasible. No, there are certain people that we would like to have attend the event. Certainly, strategic partners, members of the media, if possible, would like to invite some government officials, because we're working with an association right now whose mandate it is to help small and medium-sized businesses in the Asia Pacific region, which Canada and the US are a part of, connect and do business with each other, and they have ties to the government. So through them, we're hoping to be able to invite some government officials for them to be aware of what we're doing and how we're helping at least businesses here in Canada potentially expand and export their products to the Asia Pacific region. So to answer your question, yes. So certainly members of the Tenet Group are going to be present. Folks from China, we're hoping that the Golden may be able to bring back a couple of our partners in China with them to attend the event, but we're not sure if that's going to happen. But certainly Golden will be back for that event. So members of the Tenet family, certain shareholders will definitely be invited. Probably longer-term shareholders, those that have been with the company for a number of years, that have witnessed the evolution of the company. We'd certainly like to have some of those folks be at the event as well. And like I said, strategic partners and members of the media. That's who we're targeting for the event.
Awesome! Can't wait. That's about all I had for Q&A, Johnson. I will turn it back to you for any closing remarks.
Okay, thank you very much. Once again, I'd like to thank everybody for attending the second quarter 2022 financial statements shareholder meeting, and very excited about the future of this company, as I'm sure you're well aware of right now. Now, things were a little bit slow in the second quarter in China, but we expect activities to pick up in China. Again, supply chain will continue to grow. We're looking at branching out, well, not necessarily branching out, but making a splash into the clean energy sector. There are other sectors as well, like the energy sector, petroleum, oil and gas also, that should be very beneficial to the company's top and bottom lines going forth. But more importantly, we're very, very excited about expanding outside of China. So more and more emphasis will be put on the activities of the company in Canada, and eventually in the US, and potentially in Europe by the end of 2023 or early 2024. So also a different business model. We're looking forward to rolling out something that's a little bit more simple for our investors and shareholders to understand. So keep KPIs, more news. We will, once we file the prospectus and we get the financing closed, you can expect a little bit more in terms of news flow, because we will then have the capital that we need in order to accelerate some of the things that we'd like to do. So again, I want to thank you for your time, and we're looking forward to having you continue to support the company, and looking forward to continuing to deliver on everything that we've promised our shareholders. Thank you, and have a good afternoon.